Well, I'll try this again. First video, for some reason, the sound didn't work. Um, anyway, uh, to start off with, um, I've been saying that I didn't think this was a daily cycle low. I know probably all cycle analysts have been calling this a daily cycle low, but I didn't really think that was the case. The reason being is that the cycles have evolved beyond what used to be normal. It used to be 18 to 28 days was a typical daily cycle duration, but the cycles have become stretched and extended, probably because the currency cycles have also uh, elongated and evolved, probably because of global QE. So, assuming that this little dip here was a daily cycle low, you can see here that this cycle was 49 days, 46 days, 36 days, 53 days, 48 days. So I believe this bottomed on about day 28. That's just kind of it's too short for um, the cycle low that in our modern markets they've evolved. So I was under the impression this was a half cycle low, and there's a couple other things uh, that should also happen at a daily cycle low. The 10-day moving average should turn down. You can see that's happened at every one of these. Did not turn down here; it just kind of flattened. And this is a chart of the mining stocks. You can see this was just a little 2-day drop. The 10-day moving average didn't even slow down. So you can see at these other daily cycle lows, the 10-day moving average did turn down. So that is another. I want to see confirmation from the mining stocks on a daily cycle low, and they did not confirm that dip uh, last month was a daily cycle low. So I was pretty sure that everybody had this wrong. This was not a daily cycle low; it was a half cycle low, and that we still had a daily cycle decline ahead of us. Something that would occur in the more typical timing band of 40 plus days, and uh, and that's why I suggested for my subscribers that have trouble hanging on during daily cycle declines that they place a hedge on their metal positions. I would not lose my long position because there's always risk of a surprise to the upside. So I would hold that long position, the core position. But like I said, if they have trouble hanging on and they have a tendency to sell into the corrections, then right in here I suggested traders place some kind of a hedge just to help them make it through the daily cycle low. And uh, and I told subscribers in my report last night, I said that the drop when it comes is going to come pre-market. It's going to catch everybody, long, and then the same thing is going to happen. It happens at every one of these daily cycle lows. When the trend line gets broken, people will sell into the correction. Human nature never changes. Same thing's going to happen at this daily cycle low that's happened at every one of these other daily cycle lows, and it's going to happen uh, on into the future for as long as human nature remains human nature. And so, here's what happened. And I explained this in my last video. The people that missed this rally, uh, they they bought too soon. They bought either on this first day down or the second day down, and then what happens is the market doesn't turn and go back up like they were expecting. It drops further and it breaks this trend line, and then they get stopped out at the bottom, so they end up selling at the bottom. So that looks like what's happening. I suspect we got options expiration on Friday, so I think we're probably going to break. We're going to break this support. We're going to break this trend line. Uh, Another thing that tends to happen at daily cycle lows is sentiment will get bearish. At least short-term sentiment will get bearish. It did not. We did not print any kind of bearish sentiment at this move here. That is an important confirmation to confirm a daily cycle low. I need to see some bearish sentiment, short-term bearish sentiment. Did not occur here. It definitely did not occur in the mining stocks. And usually the 5-day RSI will get oversold during a daily cycle low, and that did not occur here in gold or the mining stocks. So, like I've been saying, I was pretty sure this was a half cycle low. We would get a daily cycle low during the next correction, and I think that's where we're headed here. We've, like I said, this drop is occurring in the pre-market to catch the longs on the wrong side of the market, and then everyone is going to sell, uh, down here when we get oversold and when we print bearish sentiment. That's where everyone's going to sell. That's where you run out of the sellers. That's where we'll put in our bottom, and then the next leg up in this intermediate advance is going to go well above 1300, uh, maybe to 1320, 1340. I'm kind of expecting this year is going to unfold as a kind of a triangle type consolidation pattern as we try and turn the 200 week moving average back up. So this is kind of what I'm at the moment anyway. This is what I think is probably playing out, that this really hard move after the election, down back below the 200 week moving average, has probably knocked gold into a triangle type consolidation, and that will give this 200 week moving average some time to bottom, flatten out, and then turn higher. Right now it's just dropping too steeply to probably just take off and run. So that's kind of what I expect is going to happen, is that we're just going to have to bounce around in this triangle this year, give this moving average some time to flatten out and turn up, and then probably 2018 is where we'll really start to see gold take off to the upside again, test these all-time highs, and then break out of those highs and start our final bubble phase that I think is going to go to at least 5,000 and maybe much higher.